percent profit. So yeah, now let's get started with the video. How to grow your small account in Forex the right way. I've underlined the word the right way because there's so many videos on YouTube that you see that explain to you how you can grow your small account in Forex, but they don't even mention risk to reward ratio, risk management, and a lot of other stuff. They all talk about how to flip your account. Basically just put a big risk, maybe got like a $200 account and they're like open a one lot size, scope here, or just do some stupid stuff that can potentially blow your account. As always, never try my ways on your live account straight away. I highly recommend that you go open a demo account, you test that couple of weeks. Once you get the results that you like and you see consistency, then put a small deposit into your live account and then see how it goes. You need to trade less and you have to be very selective on your trade. What I mean by this is you don't necessarily need to enter a trade every single day of the week. You have to be very selective. Selective equals high probability trade equals you're making money. I know it's going to be hard, but trust me guys, once you start trading less, you actually make more money. Use a good risk to reward ratio. By this I mean you shouldn't use anything lower than 1 to 3. What that means, you risk 1% to make 3%. I see people risking 1% to make 1%. That's really bad, because if you win one trade and you lose another trade, you're basically back to zero. Whereas if you use, for example, 1 to 3, if you win one and you lose one, you're still up by 2%. So it's very important that you use a really good risk to reward ratio. This is one of the key areas when it comes to growing a small account. Monitor your trades. By this I mean when your trade gets to a certain level, you need to adjust your stop loss. For instance, once your trade gets into one-time risk and floating profit, it is very important for a small account that you move your stop loss from a loss into break even. So in case price does decide to do a U-turn and hit your stop loss, you've lost nothing. In this video, we're going to be using one single indicator. It's called EMA, and we're going to use a 50 EMA. Are we going to be trading with an indicator alone, so make our decision based on what the indicator says? Hell no. Basically, we're going to use a high confluence trade. So we're going to depend on the trend line, we're going to depend on what the candlestick is telling us, and we're going to depend on the 50 EMA breakout. All of this will equal a high probability trade. If you only trade based on what the indicator is telling you, trust me guys, you are going to lose big time, especially if it's a small account. First thing is first, we always start on the daily, no matter what. If you start in your analysis on a smaller time frame, there's a high chance you're going to lose. And we're gonna go to indicators and we're gonna search for EMA. And we got this bad boy here with 3 lines, which we don't need. We're gonna go to the settings. We're gonna remove the 20 EMA and the 200. That's a long term, the 200 one. And we're just gonna stick to the 50. I'm not a girl, so I'm gonna go for, let's see, red, not pink. This is just a matter of preference, sorry guys. So once you added your 50 EMA, it looks something like this. Now we're gonna hide it, because remember guys, we need to use a trend line in addition to the candlestick and the EMA to get a high reward risk to reward ratio. So I'm gonna grab my trend line and I'm gonna draw something like this. And the reason I'm doing this is because we have a one touch here, one touch here, one touch here. There's a high chance that once it breaks through this, price will do something like this. So it might do like something like that, because the more touches it does, the weaker it becomes. Okay, so step 1 is done. We drew the trend line. Step 2 is read what the candles tell you. Okay, so now we're on the daily, so we do nothing, we just wait. Remember, sitting makes you money. We do nothing, we do nothing. Okay, here we had a breakout of the trend line, and if we add the 50 EMA, we also broke above the 50 EMA. Now what we need to do, we had a breakout of the 50 EMA. Now we need to mark our key zones. Okay, no problem. We just grab this tool over here. Let's see here, something like that. So we're gonna draw something like here, and another something like here. Okay, the reason we drew here is because price touched here and then it just bounced, and then it came here, touched again, and then it broke through it. So this was support, and now it became resistant. Another touch, so it's a really good resistance level. Then price broke through the support zone, touched it, and now it has the potential to touch through and break through it. So we did the zones. It's very important, guys, that you mark your zones. Okay, now we just got two things. We need to wait at a pullback and read what the candles say. So now we dive to the 1 hour time frame, and basically we need to wait for this price to come somewhere close to this and see if we can get some sort of rejection. So we do nothing. Okay, now it's getting closer. This is getting interesting, but still price hasn't touched it or came very close to it. Let's see. Oh, this is very close. There we go. So price pretty much touched it. Now we need some sort of bullish engulfing, and bullish engulfing is basically this. So let's say we got a red candle like this. We need to have a green or blue or whatever color you're using, and we need something like this. Both of these is acceptable, something like this, or green. Let me put it green. So this is basically eating up this. This is one version. Another version is, let's get another one. So we got another one somewhere here, and let's use green. So no, red. Another version is something like this. So you might have a little one, and then this is followed by another one, something like this. This is also equivalent to this, because the two green bullish engulfing is really engulfing the bear candle. So both of these is acceptable, and this is called bullish engulfing. Okay, so now we got one bull candle. That's good. There we go. We got the second one. Let me zoom in so you get. So this is touching the bottom, and this is just about that. So this is where we got this. Like, we got the bullish engulfing, and we enter at the pullback. So we followed a step 1 to 5. This is a perfect time to enter, and this part is important. So you're gonna enter once this candle closes, something like that, and you're gonna put your stop loss just below these lows. And what we're gonna do, if we go back to the daily, let's make this bigger. We're gonna draw this, and we're gonna aim for the next zone that we drew on the daily time frame. So let's just adjust this risk to reward ratio. In this example, we're getting about 1 to 18 risk to reward ratio, but we might never get to the second zone. So now let's go to the 1 hour time frame, and let's see. And as soon as price gets to the first zone, we're gonna move our stop loss to a bit higher, so we have secured guaranteed profit. So yeah, let's see what price does. So at this point, you should have already moved your stop loss to break even. There we go. We broke above the first zone. Sorry. If we look on it on a daily time frame, that's the first zone. So let's go back to the 1 hour time frame, and ideally you should move your stop loss to just under the recent lows to secure a profit, just about here. So when it comes down here, let's see how much profit are we going to make. So we're risking about 11 pips, and we're going to make about 20 pips. So it's already 2 times your risk in guaranteed profit. Already we're in a good roll. Let's see what price does. Price is the boss. So here price is broken above it. It might just do a retest. So to be safe, we're just going to move our stop loss again, and we're just going to see what price does. There we go. So price did a U-turn, it hit our stop loss, but that's not a problem because we've secured already a 9%. So it was a beautiful 1 to 9 risk reward ratio. So we risked 1%, that was our stop loss, how we started off, and we gained 9%. Remember guys, once you have one winning